first and foremost, I really appreciate you guys for taking some time out of your day on your Friday. Hope everyone had an absolutely fantastic day and a fantastic week. So today's a little quick and easy lesson. We're going to be talking about stop losses, the importance of stop losses, and kind of just some game plan revolving around them. And then towards the end, we'll do a quick little Q&A, if anything. So if you have any questions during the presentation, just feel free to drop it in the chat and we'll get there when we get there. But anyway, so I want to know real quick up front. So just kind of just type it in the chat. Do you guys have a set stop limit in mind? So like, okay, it hit 20%, I'm out. Or hey, it hit 30%, I'm out. Or do you have more of a range? So what do you guys usually do regarding your stop losses? Okay, so I'm getting a couple different things. We got using levels with Fibonacci's. We have a standard 10 to 15% stop loss. We have candlesticks and prior candlestick close. So we got tons of different answers here. Awesome. So the reason I asked that is because a lot of newer traders have seen online and just, from other people talking, hey, my stop loss is whatever the case may be, 15%, 25%, just a standardized stop loss, nothing else. And then they just automatically just stop out without even like looking at the price action. It's like, oh, my stop loss has hit 20%, time to get out of the trade. And then what usually happens is 30 seconds later, 2 minutes later, the price action just completely reverses. I'm sure you guys probably have experienced that, as most people have. So what I'd like to talk about instead is the importance of having a generalized range of a stop loss, and make sure you're actually invalidated in your theory before just blindly exiting one specific trade. So let me see if I can find a good example of that. One sec. All right, I guess we'll use this area as a stop, kind of an example. So we'll pinpoint that right there, go back on the 3-minute. Okay, so let's just say, we'll kind of paint the picture. Let's say, because not every situation is, picture perfect and the ideal situation. So let's say now, just some, first and foremost, let's pretend this is not a 0 DTE day. Let's pretend this is a regular weekly contract, so you have a teeny bit more room. All right. So because if this is 0 DTE, your contract's probably messed up. But let's just say you're on a weekly contract and it's a fresh week. So let's say I think this stock can continue higher. I'm going to buy calls. And I didn't buy at really the best time. But let's say I bought right around here, somewhere, maybe, hopefully not the top, because you definitely want to be chasing. So let's just say I entered maybe like right here, and one of these candles right here. And then I see that there is a large area of support right there that we've held here and then a couple of days prior. So we know that this area is held before. So most of the times people will stop out probably right here in this general region right there. So because they said, oh, let's just say my 15% stop loss has hit, not even caring about anything else. They said, oh, 15%, got to get out of here, right? So the real question is, I'll ask you a question. So if there is a possibility, a very high chance that there could be a bounce at, say, 23% stop loss, and then we could get something like this. Now, I'm not saying it's going to happen every time, but let's say we know that in this case, there's a strong support region that's been held. And instead of stopping out at 15 or so percent here, around maybe 23%, let's say, there is a possibility of a bounce. Would you risk that 8%, or would you cut at that 15%? What would you do? So I'm getting a couple different answers. So we are getting stick to the plan and re-enter as needed. Absolutely great one. We're getting risk it, and then we'll also get risk it for the biscuit. So we have a couple different viewpoints. So me personally, if I know that I'm not fully 100% validated, so like I know that this is low of day, and there's a possibility of some sort of reversal. So we got pretty much a trapping down here. We picked up liquidity and we trapped out a lot of people and kind of just reversed the other side, right? So I know in the back of my mind that's a very real possibility that that could happen, and that's why I like to keep a range in mind. So like in this case, I would have probably had like a 25% stop loss, because yeah, obviously here's 23%, but I know that I got invalidated. So I probably put like 24, 25% stop loss. So it's still relatively minimalized, because in my mind, if I get stopped out like right here in this general area, and then not even 15 minutes later, 10 minutes later, we ended up kind of just soaring. And let's just say we start cutting in this general area right there. Then our, in a sense, we are kind of just stopping ourselves out for no reason, just simply because we have a hard stop loss. So that's why I like to kind of have every single trade different, because every single scenario is in a sense different. No, there's not going to be a picture perfect scenario every single time. One time I could be entering at an absolutely fantastic entry, like absolutely fantastic. Like I could enter like somewhere on the bottom, absolutely perfect, right? Whereas other entries I could be entering maybe somewhere up here, right? So that's not the best entry possible, but I stuck to my game plan and said, hey, we didn't break low of day here, so I'm pretty good to go. So that's important to kind of have more of a range for a stop loss and a max threshold. So like obviously you don't want to have like a 40-50% stop loss. You want to have still a max pain threshold that you are comfortable with losing. For me personally, it's about 30%. So if I realize, hey, I'm already down 30% for a day trade, it's going to be a little bit different for a swing trade. But for a day trade, if I'm down 30% and clearly I'm starting to get invalidated, the price action is drying up, the volume for my bias is drying up, whether it be bullish or bearish, then I'm going to be like, okay, I got to take this loss and let me peace out. And like Mike said, you can always re-enter, right? So knowing that in the back of my mind, I always try to structure that, because one trade I could enter, like say for example, I entered here. I already know my stop loss. My stop loss is literally like right here. Like give myself a couple, pennies, but that's my stop loss right around here. So in this case, I'm probably risking about 7, maybe 10% stop loss. Now, if I had a bad entry, maybe up here, then I'd be okay with risking about 20 to 30%, because we haven't hit that low of day yet. And I'm still, technically speaking, my analysis is still correct. I just haven't, I just didn't get the absolute best entry possible, because you're not going to get the best entry all the time. You're not going to get the best X's all the time. So you kind of want to get that out of your mind. You're not going to be sniping bottoms. You're not going to be sniping tops. It's like, I'm not saying you're not going to be able to, but the likelihood of you doing that every single time is it's just not in your cards, in a sense, right? So it really depends on how I enter a trade. Like if I get a pretty good entry, if I get, something like this, we get a low of day bounce again in this general area, I already know my stop loss is going to be super, super tight. Whereas if I miss this and I come into the market a little bit later and I see something like this, because, this is still completely valid because we made a higher low. So we're still in a bullish structure and I got in on a pullback. So my stop loss would be a little bit wider, but it still wouldn't be that bad, because let's just say I enter here, my stop loss is about down here. And then my real target would be somewhere up here, because this is where we got rejected. So it ended up coming up basically right to it for me. And we came into a 2.5 risk reward trade. So still, this is perfectly fine. Risking that low of day break. And then let's just say I got a great entry. So this would probably be, I'm not really sure exactly what this would be, probably about 20% or so, give or take 20 to 25% risk to reward, or excuse me, stop loss. Whereas let's just say I entered here in the market, I came in right here, then I entered, let's just say right about there. My stop loss is exactly the same. So now we turn into a 5-to-1 risk to reward ratio. So it really, everything depends on where you specifically enter at and when you come into the market. So kind of just like really sum everything up for this little presentation is keeping like set stop losses in mind definitely is helpful, but sticking strictly to that stop loss and having no wiggle room or in a sense flexibility can really really hurt you, because there's been multiple times where I would set a 15% stop loss and then I get kicked out like most retail traders do, because most retail traders do the exact same thing. We set 15% hard stop losses, 20% hard stop losses, and market makers can see all that on the tape. Now, just to kind of preface that, market makers don't really care about us as retail traders, but they can see where all the liquidity is. So they just drag the price down, drag the price up, stop everyone out, basically stop hunt them, and then reverse the price. So instead of keeping that generic 15% stop loss, now I have more of a wiggle room in mind, and I have a max threshold in the back of my mind. So because if I'm down already 15% and I see an absolutely like super hard level, or we haven't really broken structure yet, we're still making a higher high and a higher low, we haven't broken that structure, then in my mind, I haven't gotten invalidated yet. And I'll be okay with having a little bit more flexibility and wiggle room, because I could be down 15% and I see that, hey, we didn't break structure yet. And there's possibly a monthly support right here, like a little bit underneath. I'd be okay with risking 20% all day long and risking that extra couple percentage. And if I'm wrong, that's okay. I'm still gonna practice correct risk management and get out of that trade if when we end up kind of invalidating and we end up going under that monthly support level, because then in my mind I'm 100% invalidated if our price action cannot hold that monthly support level that's been concurrent for a while. So that's just kind of my thought process of it, is having more of a max threshold in mind. And for me personally, it's 30%, and having more of a wiggle room. So like I said, every single trade is different. One trade I could get a fantastic entry, whereas a different setup I could get maybe a little bit more mediocre of an entry. And I have to be kind of okay with and being mindful of the fact that, hey, this entry wasn't really, in a sense, the best, but I haven't really gotten invalidated yet. So I'm going to stick to the game plan and have a little bit more wider stop loss for this trade individually. So for me, I usually have anywhere from about 7% stop loss to about 30% stop loss, depending on any trade and when I actually enter. One second, let me just catch up on a couple of the questions. With 0 DTE, sticking to it maybe on a regular Monday. Yeah, absolutely. Like that's why I kind of said that up front. Like 0 DTE, you want to definitely be pretty mindful of this, because as I said in the beginning of the presentation, that 0 DTE can be extremely unforgiving, like very unforgiving. Like Faye, for example, down here, let's just say this is like 25%, but we end up not bouncing here. We get some sort of candle, like something like that. We get that extreme candle within 1 or 2 minutes. That once 25% is now negative 40%, very, very simply. So like definitely you don't want to be doing that type of mentality with 0 DTE. You definitely want to kind of tighten that stop loss on 0 DTEs. So maybe instead of having like a 30% stop loss, maybe for 0 DTE days, do like 20% or like 25% maximum for a threshold. And then other days, maybe like if it's a weekly contract and you have a couple days left and it's not a 0 DTE, then you can have that wider 30% stop loss range. But that's just me personally. Everyone definitely has a different thought process, but I know from just personal experience, when I had those generic 15% stop losses or 20% stop losses, there's been multiple instances where I got stopped out And then not even 15 seconds later, this price action just completely reversed and soared. And I'm just thinking here like, damn, I just took a loss like a bozo, and then the price action just went 100%. Like I went from negative 15% to the contract went to 100% profit. I'm like, damn. So that's why I learned the hard way to not just have a specific set in stone um, stop loss and not even looking at the price action, because yeah, absolutely, when I actually get invalidated, when the structure breaks, and or when we become invalidated in like the support and resistance areas or the supply and demand areas, then yeah, you have to be realistic with yourself. You can't just have hopium and be like, oh, let me just bring my stop loss down, because that ends up being even worse. I'd rather take 25% loss over a possible 50% loss any single day. And that brings me to my next point really quickly is you want to have a game plan when entering any single trade. So what I mean by that is you want to actually either mentally map it out or visually map it out. Me, I like to visually map it out. It's like, okay, let's say, for example, none of this shit has happened. Let's just say we're right here. And I didn't enter here. I came into the market around this time frame. I see that we bounced in this area once, twice, and now there's a possibility that we could bounce here again. So what I'm going to do is I'm going to create a game plan for myself before I enter a trade. So why would I do that? The reason I do that is because since I am not in that trade just yet, I'm not really necessarily emotionally attached to it, right? So I have more of a clear mind at the moment because my money's not attached to it. I'm not attached to it whatsoever. I'm just sitting and watching, right? So this way, I'm doing, in a sense, visualizing your trade and figuring out, hey, where's my invalidation? Where's my stop loss? And where are my targets? Where are my profit targets? So, and I want to do that on a clear mind, because if I do not do that on a clear mind, what's not to say if I have no idea what the hell my plan is, that my stop loss that should have been here ends up being down here because I'm emotionally invested. And this is when, we get that generic hopium aspect. So, hey, I'm just going to gradually move my stop loss down just a little bit because I think it's going to bounce. And 60% of the time it does not bounce, right? So you can't have that hopium aspect. You just got to be mindful. Hey, we broke low of day structure, where it doesn't look like the volume's picking up here. I gotta bounce, right? And you have to just be okay with taking that loss, because if you can't handle a loss, if your ego cannot handle a loss, like, you're not made for trading, like, just point period. Because you're not going to win 100% of the time, just plain as day fact. But as long as you're able to correctly manage your risk and have tiny little losses, then you can definitely be profitable. It's just first you have to kind of get over that mental barrier and being okay with taking a loss. But anyway, so getting back to the point is, okay, so here I am. I come into the market during this time frame. I know that this area has bounced prior a couple times. It bounced. Where the hell did it bounce over? It bounced somewhere. Yeah. See, like, there's a decent bit of participants in this area. So I know this area is definitely something to kind of be mindful of. So what I would do is, first and foremost, I would be like, okay, what is my invalidation? My invalidation is under this area right underneath low of day. So I'm going to visually put pretty much what I do is I pretty much like actually draw something like this. Okay, let's say I entered right there, and then my stop losses, I'm going to give myself a couple penny stop loss, a couple pennies underneath that area just in case. So I'll put it down here. And then where did I last get rejected? Where did we finally end up kind of, starting to reject it? So that's my first real target right about here. So I would kind of visualize it. Okay, this area right about that general region will be my first major target. Okay, what is this? This is a 5-to-1 risk to reward ratio. I'm taking these setups any day. I don't even have to think about it. As long as the volume is there and the price action looks good, I'm taking this all day long. This is a fantastic risk reward setup. So this will be my first major target, would be right here. So then, okay, where's my secondary major target, would be right here, right? So now I know 2 major targets, and then high of day would be my third major target. So I already know where's my stop loss. Cool, right there. Where are my major targets? Boom, boom, boom. Already mapped out. Everything's ready. My game plan is right there. That's my thesis. Now, secondary point is the trade is dynamic. It is not going to be static. So this is my picture perfect, right? This is what I think and hope was going to happen via my analysis, but that's not always the case, right? The stock market is not going to give you a picture perfect scenario every single time, because we could always get rejections. We could get, exhaustions in the price action. So I have to be able to think on my feet and realize, hey, I don't think this profit target is going to hit. I should be okay and just take some, take some profit off the table, secure some money, or just completely get out of this trade. So in this case, hey, we came to that first major target, and it looks like we're starting to get rejected at this area. So I should be taking off most of my profit right here, because I'm still up a good bit of money, right? I'm still up right about here. So and just being realistic with yourself and be like, okay, I don't think this is going to happen just yet. So I'm going to take either all of my profit or like, 90% of my profit off the table right here, because we did just get a nice $2 to $3 move up. This is, pretty significant for our contract value, or excuse me, our premium value for our contract. And then now let's just say that didn't happen. Let's just say, for example, we only have that right here and we start getting stalled out. And this is our major target. A lot of times retail traders or newer traders refuse to take profit here because we didn't hit our major target. So they think, oh, I'm going to hold out just a little bit longer and possibly, get that target in mind. So this is why I'm saying you have to be, you have to be dynamic and open-minded, because you realize, hey, we're getting rejected. The volume is stopping out. The volume is kind of dying down, and we're getting a little bit of short-term exhaustion. Now, let's just say that this didn't happen, and we end up possibly just going straight back down, which is very, very possible. And then this is why you have to be kind of thinking on your feet and at least taking some profit off the table instead of no profit at all. Because a lot of times people don't take profit, like literally at all, until it hits one target. And even if it comes close to that target, like let's just say in this case, it came about 50, 70 cents away, which is relatively close. And they refuse to take profit here because one, either just greedy, or two, their OCD tendency is kind of stepping up. And they're like, oh, we didn't hit that exact target I have in mind. I'm going to hold out and just, just try to get that full amount of money, trying to squeeze every penny out, which isn't really the best mindset. I've tried that before. And there is some times where I was like really greedy. Like I'll be completely transparent with it. My contract was up, everything's good to go. And I'm so close to my target. Like I'm a couple pennies off my target. Like I'm so close. I'm over here thinking, I'm just going to wait. It's going to go in my favor. No big deal. And I would refuse to take profit, looking for that extra like $5, $10, like something insignificant. And I'm just waiting. And what happens more often than not is I end up getting rejected, and that profit that I could have had ends up just disappearing. So I either come out with very little profit, or I end up getting no profit at all, because I'm thinking to myself, I'm just going to wait for that extra, 5, 10 extra bucks. And that's not worth it. Like I'd rather undercut myself and realize that I'm getting rejected, and then just take my profit, because any profit is better than no profit. I'd rather take $45 than $5. Like you don't want to be scoffing at any profits given to you. So that's kind of my stipulation and my thought process on that aspect is you got to be like really open-minded within every trade, because every trade it might be the similar setups per se, but there's always going to be minute differences along well, not along, throughout the trade. And then that's kind of what I end up doing. I like to visualize my trade. I like to see, hey, where are my targets at? Um, and then, hey, where's my stop loss at? This way, I'm doing it clear-minded. I'm not emotionally trading, and it just works out like that a lot better. Because then, if you don't do that type of aspect, you're gonna get really hopium. You know, you're gonna get really emotional, and your stop loss that should have been tight in this case, like this is a very tight stop loss, ends up being like something like this. You know, so your once 5-to-1 risk to reward possibility turns into a not even 2-to-1 because your stop loss just keeps gradually moving down and down and down. Hope that one makes sense. Let me catch up on the comments real quick. Yeah, absolutely. Great comment. You got to lose more than you win, just lose less than you win. Yeah. So that's actually a really common thing. That's a misconception is people think you need to have like a 70, 80, 90% win loss ratio just to be profitable. But fun fact, you actually only need 30%. Sounds crazy to think about, but yeah, you only need 30%. As long as, so if let's just say you lose 7 times out of 10, as long as your stop losses are relatively pretty tight and you realize, hey, I got invalidated, I'm not going to hold on to this anymore, I'm just going to move on type of thing. And your stops are relatively low, and your losses are low. And then your 3 winners, you're like, oh, hey, this is clearly going in my way. I'm going to try to squeeze this as much as I can. And that's where the importance of like runners come into effect. Like taking profit along the way and securing profit along the way. But yeah, that's kind of my what I want to talk about today is just creating a solid game plan before entering a trade. Try to visualize it out, and also just a stop loss. Try not to kind of keep a concrete hard stop loss in your mind. Try to have more of a range, and it'll work out a lot better in your favor. Uh, Hold on, let me just answer 2 questions. By the way, if you have any questions, just ask them now. We're going to probably end the session very soon. So where do you see SPY going from here, given we're in a weekly demand zone? Honestly, it really depends on next week. So like we have that huge Fed meeting next week. So we're going to get tons and tons of volatility. So we could very well get a nice bounce, which since we did have a massive gap here, let me see if it'll show. Yeah, so like you see this massive gap, we could very well possibly get a bounce somewhere in this demand region and then kind of fill that gap either beginning of the week or the end of the week. I wouldn't doubt it if we get that type of move on Tuesday or Wednesday because of the Fed meeting. And then right after the Fed meeting, after the gap is filled, we could probably just chug along back down. That's kind of scenario 1. And scenario 2 is we could kind of just keep on going up. So try not to have just one bias going into next week. Try to just have multiple scenarios and just see which scenario plays out. Hope that one helps. How much do you trim per profit target? That's a good question. I mean, it also really depends on how many contracts you're in. Like if you're in 2 contracts, at least try to trim, 1 contract. I wouldn't trim both of them at the same time because we could always continue running. So you want to definitely trim along the way. And then it really depends for the secondary question, how many contracts do you start with on a light entry? So sometimes if I didn't get the best entry, possibly I'll average down 1 time. Now let me talk about that real quick. You don't want to be continually averaging down over and over and over again. I would highly recommend only averaging down once if you do. Because if you think about it, you're basically just buying more theta and you don't want that. So sometimes I'll size in to trades. So like maybe if I think my size for this trade will be like 10 contracts, I will kind of put a feeler out in a sense and maybe open like 5. And then if it's going my way, cool, I'll open a couple more. If it's not going my way, I'll de-risk and sell like 3 contracts and then hold 2. So, or just completely cut the rest. It really, like we said before, like every single scenario is entirely different. So sometimes I'll size in or sometimes I'll just full out buy 5, 10 contracts, whatever the case may be. Do you sell at market or limit? So usually I will always sell at limit. I don't really use market orders very much anymore because I primarily am an index trader. So I don't really, in a sense, have to make a market order. I can just slap the ask and be filled pretty quickly. So, you know, I don't really need to open a market order. So usually I will slap the ask to get in and then just limit order out. You can definitely like market order SPY. I'm not saying you can't. I'm just saying since the spreads are so tight, I usually don't have very many issues just buying the ask instead of the market. Because if I buy the market, I could get possibly, you know, waste extra money, and you know, every dollar counts in a sense. Now, buying market for other things such as like larger spreads, you know, $20 spreads, $50 spreads, $100 spreads, definitely do not buy market for that. You're gonna waste your money very quickly. But if you guys don't have any other questions, I'm going to end this session here. So see if you have any more questions, type it in now. Awesome. Well, I appreciate you guys for coming. I hope you learned some stuff. I'll post this up a little bit later if you want to check it out again. Might do another one on Sunday. So I just have one little quick announcement. I mentioned this a couple days ago last week. I am going to start doing a 3-month mentorship. I had a couple people ask me about it. It's going to start, what day is it going to start? Probably the 21st of this oh, not this month, the 21st. So what's going to happen is it's going to be 3 months long. It's going to be 30 hours duration, and we're going to be kind of just chugging along everything. So, and then after the fact, I'm going to be sticking with you, and we're going to be doing reviews every month. We're going to be checking your trades every month. So this way, we're going to be actually gauging your progress and seeing what mistakes you do often, so we can kind of pinpoint that and fix it. So this is definitely going to be a little bit different than the normal mentorships that people provide. You know, they do like 8 hours or 12 hours and then kind of just set you go. I don't want to do that. I want to have you by my side for months and gauge your progress along the way, figure out your weaknesses, figure out your strengths, and then kind of just actually, you know, go from there. So this way, you'll get a lot more acceleration to your learning curve. So if you're interested in that, just DM me, message me personally. We'll talk about it. But the slots are going to be pretty slim. I'm not going to have a large class for this at all. So we'll be starting either the 20th or the 21st. So just let me know ASAP. Thank you for listening. Hope you have a great rest of your day. Enjoy the rest of your weekend and stay safe. Just message me personally if you have any questions or if you think of anything after the fact. Thanks again, guys.